Well, that was a nice intro. We are live and alive. We should be live on X right now. So giving it a few seconds for people to like trickle in. But you guys will also hear this on the recording. We announced it last week, but now we're finally here on the show. We'll make it very clear and informative for the next 20, 30 minutes. We'll be sharing the vault that the three of us, three different entities, Moo Digital, on Accountable Platform, and like us as the strategist on Sharpbyte that we have launched last Friday. The point of this streaming and recording session is to pretty much give a bit more clarity around what that product is on Monad right now. And by the way, it's also listed on the Monad like front page. So thanks, Abdul, for that. But yeah, so we are pretty much gonna go into all the details of like what is the strategy, what is this asset about. So listeners or those who are interested in depositing can understand a bit more about the risk and what we're actually doing with the capital. So I guess I'll quickly set the stage that this is a very interesting. Of course, it's biased because I'm one of the involved parties, but I think it's right now in crypto, there isn't as much diversified off-chain yield. A lot of the yield sources are either still very much correlated with the broader crypto market. So it's either basis trade, it's either like broader DeFi borrowing lending cost, or even like crypto market making, or like crypto like discretionary fund, which all of them are correlated when the market goes down. This is one of the more interesting product, and one of the reasons why we wanted to like become the strategist, because it is fairly diversified, in fact very diversified yield source from the crypto markets. So we are going to jump into what all of that means in a bit, but I will start by showing how the product looks like on the Accountable website right now. So if we can bring it up. Yep. So you guys can see that this is the vault right now that's on the platform. So whenever you go to yield.accountable.capital, you'll be able to see the vault. You'll be able to see the breakdown of the APY and the strategies. Again, we will go into this in a bit later. And you will be able to see the verification here. That's all of the assets that's backing, like all of the assets that are currently inside this vault, like how are they being utilized? Where are they currently sitting? All of this is verified by Accountable. I'm gonna pause here and pass it to Jan to speak a bit more about your tech, both for the on-chain and off-chain side.
Happy to be here and happy to support in this effort to bring off-chain yield on-chain, actually, because what we try to do at Accountable is to bring a new era of verifiable yield on-chain. So we believe that the era of black boxes is gone. We learned from the past mistakes from the previous cycle, and now it's time to actually offer to people yield opportunities which can be which have transparency attached to them. So basically, you're not just putting your money into something and hope to get the yield. You also get reassurance and proofs that the party operates the strategies that are intended as they should be. And what we do at Accountable is to get the data directly from sources and prove that the deal is real. So the vault that you see on chain there actually has the backing and operates as intended, and we prove both the availability of the funds and the yields. This is in short what we do, and actually this is what we believe will become the new standard in the industry.
Thanks, Sean. Let's go back a bit to the screen before we jump into Moo Digital. So if we can get the screen share back up. All right. So very briefly, the reason why we will use the remaining half of this conversation to speak with Patrick about what their project actually is because obviously the strategy is right now allocated towards, as you guys can see here, mostly on AZND and Moobon, which are the two products that Moo Digitals are working on. More into that later, but right now, basically, you can also check on other platforms such as Merkle that what we're doing here is basically turning the deposited capital into Moo Digital's product and deploying it on chain, mostly on Curve as LP pools. And we are farming the incentive on Monad mainnet right now. So again, like all of this is transparent and on chain. You can see the details of the yield itself. Just one, maybe I'll sort of like click on this if it makes sense. Yep. So very, very briefly, what you are seeing here are the yield breakdown. The USDC is going to be the organic yield from the Moo Digital platforms. This is a number that Patrick is going to explain a bit more in a couple minutes. The WMON, we have two rewards, like one from the Accountable team and one from the Moo Digital team. So you'll be able to claim both of these WMON rewards, which is estimated to sit at around this like APY. Of course, it depends on the TVL, and this vault has a cap of 10 mil. Also depends on the price of Monad itself. I mean, if it pumps 10x, this will go 10x. So let's all pray for that. And also, you would get points for Accountable and Moo Digital. I'll sort of like pause there first. Our DM is open for any details about this yield breakdown if you guys are interested. And let's bring this. Let's put the screen away and let's jump into our conversation with Patrick. All right, Patrick, I will put the stage to you. What is Moo Digital?
Yeah, no, thanks, Marco. Thanks for having us on. And it's awesome to launch our first vault with Moo Digital. So I think the first question probably for the users is, who is Moo Digital? And I think since we've launched on Monad, we've gotten a lot of these questions over the last 7 days. We are a Monad native protocol. And so which means that even though we've been building on testnet for really since February of this year, this is the first time that we've launched a live product where we're asking users to put in real dollars. Why did we build Moo Digital? Essentially, what we want to bring to Web3 is an access portal for the most attractive Asia-based investments. Why we can do that? Sort of, both my co-founder and I, we do have backgrounds in TradFi where we were both origination bankers, meaning we ran desks and our whole job was around, flying around Asia across the region from Southeast Asia to Australia to Japan, Korea, into China, find the most attractive deals that are sourced by both governments and some of the largest corporations across the region, and essentially underwrite these deals. Back then, we were selling these deals to institutional clients. Now we're trying to do for Web3. So to give a little bit of context, our focus on the product is Asia. The reason why we're doing that is because we do think it's a new primitive on chain. We've gotten a lot of that feedback over the last 7 days. What is this? It's not based on US treasuries. It's not based on a delta neutral trade. It's not based on a basis trade, things that people are familiar with.
Yeah.
That's essentially the reason why we built Moo Digital. Through the course of our careers, we know that there's a whole lot of interesting inventory that lives across the region that was never accessible. And it was never accessible to the everyday user, whether you were in Web3 or whether you're in Web2. Why is that the case? Because that's how TradFi is set up, unfortunately. We live in a region where it's very diverse across countries. A lot of the capital flows actually doesn't leave domestic borders. So for example, I'm based in Singapore now. If I wanted to invest even in a sovereign credit for the Philippines or Thailand or in Indonesia, it's very, very hard for me to get access to that deal. So the whole purpose of Moo Digital is to unlock access to what we think are really attractive investments and provide them on chain. Now, getting to sort of, our two products which we launched, which are the Asia Dollar and the Moo Bond. Effectively, these are two yield tokens where users can swap their stable coins into our tokens. And effectively, you can think of it as a basket of on-chain bonds or private credit, right? So what we do on our side is we'll go out and we'll source and originate, what we think are the most interesting or the best risk-adjusted investments across the region. We'll package 40 or 50 of these, into a portfolio off chain, but we deliver it, on chain within these yield tokens. So the overall basket of our underlying portfolio out the gate as we start is probably closer to a yield of 7 or 8%, but we structure that into two products. The Asia Dollar is meant to be the senior tranche, which basically is protected by the junior tranche, which is the Moo Bond. So if there's ever any single loss within our portfolio, the Moo Bond will take the hit. Now, because of the fact that we're constructing like a bond portfolio, like any single incidence of default, like in 50 different investments, probably impacts that, that interest rate from like a 15 to like 14, but it's never going to go from like 15 to 0, right? So I said a lot. There's a lot we can dive into there, but effectively, trying to bring Asia's best deals on chain, new inventory that we're trying to introduce to the Web3 market, delivered in a very easy form to digest, which is our two yield tokens, the Asia Dollar and Moo Bond.
Got it. So just a quick follow-up, I guess, as a recap, and and a follow-up after this, but the yield is coming from both private credit on the corporates and like conglomerates across Asia, as well as sovereign government bond, right? I think one question that you might have also gotten, but it's good for clarity, is there any like forex risks? Like, how are these? Like, if you can just like expand a bit more on the type of deals that you will be bringing, I guess.
Yeah, sure. So I'll start from high level and go in specific. So the high level is what we're actually trying to access is the entire spectrum of credit products that live, based on Asia underwriters. Mm-hmm. And what that means is, at the safest end of the spectrum, you can think of as government bonds. Governments generally, the global risk-free rate is seen as a U.S. Treasury, and there's a lot of on-chain products which reflect the risk of a U.S. Treasury. If you just look across the globe, from a sovereign perspective, you can get the same type of exposure to, say, the Singapore government or the Hong Kong government or Japan government. As a corollary, those are all AAA rated, and these are, the credit ratings agency that's the same as used in the U.S. is used in Asia, S&P, Moody's. So there are certain governments which are sometimes even higher because U.S. is not even AAA rated today. But then you also have the spectrum of more developing or emerging markets, right? So in Asia, those are markets like, Vietnam, Thailand, Indonesia, Singapore, Malaysia, Philippines. Like, these are all sort of on the different risk spectrum, but it's all sort of sovereign like debt. So if essentially like borrowings which are backed by sovereign entities, those are what we would say are like the safest end of the spectrum. To give you guys a range, those type of yields in Asia can be up to 7% on a sovereign perspective. And then you go down like a little bit further down the risk return spectrum, you have corporates and the type of corporates which we tend to underwrite if it's a public bond. These are some of the largest corporations in all of these countries, which are backed by, billion-dollar market cap entities with cash flows, that are essentially issuing bonds that promise a certain coupon or a certain interest rate. From an Asia Pacific perspective, depending on how far you want to go down the investment grade risk curve, that can be up to like 10%, like in these markets.
Yep.
Now, that's like all the public stuff, right? So like all the bonds. Private credit is another asset class, which whether it's in TradFi, whether it's in crypto, has gotten really popular over the past like 18, 24 months. What is private credit? Private credit are essentially deals which are underwritten either by investment banks, private equity funds, credit funds that on a one-to-one basis, they negotiate a loan with a corporate. These are still corporates. These are still, could be billion-dollar, entities, could be $100 million like market cap entities, or the corporates that have contractual agreements, to pay these. Now, private credit, because of its nature, it's one-to-one. They tend to not have credit ratings, right? Which is why, it from an assessment perspective, it's not as easy to evaluate this. Like what we look at as a proxy for, is this a good private credit deal or not? Is, who's the underwriter on the deal? Is it a KKR? Is it Apollo? Is it a large private equity fund which has like very large institutional due diligence processes, or is it some mom and pop shop which you don't really know,
or boutique firm.
Either who the fund is or like the business you're doing with, right? So that's where we say our experience actually matters because of the fact that this was our job. Our job was to go out and actually meet these families, like actually engage with governments, like actually understand like who the promoters are of these businesses. And only underwrite the things that we think are worthy enough, to be underwritten back then for an investment bank. Now, putting it into our products. So, long story. So, like from a yield perspective in Asia, like the yields like range from like 2 to 20%, right? What we're trying to do is find the best like risk adjusted stuff and then package it, into our portfolio. To your point on specifically FX risk, because that's a big concern for like Asia deals, so I only have US dollar or a US dollar denominated stablecoin. All of our investments are US dollar denominated. So we eliminate FX risk out the gate. Maybe down the line, we can introduce for certain markets that might be interested. Like if it's Indonesian denominated and want that, we can look into that. But out the gate, because we want to open up access to a global audience base, US dollar.
And I think that's the right call because not a lot of people notice that a lot of countries in APAC actually issue their government bonds that's USD denominated. So it's not like there isn't like already like these sort of like deals before. So okay, that answers one question. I want to give a quick follow up to both like Patrick and Jan. I guess like there's an off-chain component here, right? Like perhaps like what are like accountable roles and like how are you guys working with one another to sort of like verify this strategy?
I'll jump in here too. So, as you know, I mean, we are part of the structure. We are tracking Sharpbyte's assets and Sharpbyte's strategy, and we have the verifiability tab incorporating for the people to see actually where the funds go. We do the same for Mu Digital for the off-chain component. So basically, we get proofs that the bonds that Patrick told about are actually purchased and they actually exist in the portfolio. That's let's say the high-level overview that.
Got it. Yeah. And perhaps on your side, Patrick, yeah, like how are you managing it? Like, do you have like a fund entity? Like, yeah, like how's the money flow working?
Yeah, so for us on the off-chain side, we do work with a licensed fund manager. They are based out of Singapore, who essentially have the authority of the monetary authority of Singapore, so the fund license to manage funds, like whether it's off-chain or it's on-chain. So we're working with regulated entities in a very highly scrutinized market. The way that we work with them is we tell them, sort of like a risk parameters of, this is the type of investment that we want to go out and get. Now, we actually help them with the sourcing especially on the private credit side, we help with the sourcing of the stuff, but they essentially package both the public bonds as well as the private credit and put it into the portfolio. They work with us to out the gate. It's for weekly attestations, or basically like fund reports of like all the different investments that are made with our on-chain funds. So the way that we interact with Accountable is we want to make all that information available to the on-chain user, because they don't want to deal with all the paperwork in the back office off-chain, right? So we thought that this was super important to have transparency on what's underlying the portfolio, particularly in the markets now, where there have been some pretty high-profile cases of yields that it's a question mark of like where they came from, right? So we know that we're introducing a new primitive already with Asia Credit. We want to be very transparent and clear with the community on exactly what's underlying our products. What I would say is there is a little bit of lag in terms of like implementing that because of the fact that we have like reporting processes with our fund manager. We've been live for 7 days. So the Accountable proof of reserves, like we're still working through our first cycle of getting that up on our product. So we have gotten that feedback. So thank you for all the users that have given us this feedback that you'd like to see the transparency behind it. Rest assured, we are working with Accountable to get that up, and it's been in our plan. We're working through the sort of like the first like 7 days and the kinks of just working the off-chain to the on-chain flows and reporting it. But that's definitely a key feature of our product.
Got it. One last diligence question. I like promise you, like, because like otherwise the lawyer would get mad at me. But yeah, like what's I guess sort of like what's the like how's the like entity being structured like between like Mu Digital itself and like this like off-chain fund? Because I think with a lot of like these private credit adjacent backed like protocols, like that's often the risk that folks are asking, hey, is this and there's like, I guess like without naming names of like other protocols, like some folks have like said, oh, I would only do the deals if it's like US based like laws, or like, so like if you can just like shine some more light on how people like in the worst case scenario, like what kind of recourse do you actually have?
Yeah, so what I would say is there's a reason. I get two things. There's a reason that we worked with a licensed fund manager in Singapore.
Yep. In Singapore also.
There's also a reason that we make sure that fund manager is in Singapore. For those that are not as familiar with investment in this part of the world, basically Singapore and Hong Kong are seen the highest scrutiny financial centers in the region.
Yeah.
Which means that if you're getting that stamp of approval from the regulator, there are serious repercussions, for any mispractice or a misrepresentation of the funds. So the way that we interact with the fund management partner is we are the sole LP for the funds that work through them. So meaning we have legal recourse through the entire Singapore court system, through with the backing of the Monetary Authority of Singapore if anything goes bad. So we think that if you were a high net worth individual in Singapore, these are the protections why you put your money in Singapore. So we feel like this is the highest level of protection we can have from an off-chain perspective. Now, translating that to the on-chain, that's exactly what we're talking about now with Accountable. So at least you can track where are the funds going, where are the flows going, and actually have on-chain real-time attestations. If you deposit in our products, you know exactly what it's getting deployed against, and it's being held in one of the highest standard financial centers in Asia.
Yeah, that's a good info for a lot of people that don't know. Like, I think there was an article from like Wall Street Journal or something like that that says that Singapore has like a flock of like family offices like just moving to Singapore like from other regions, like even from Hong Kong and so on. So yeah, there's a reason why. I guess like I always like to translate it. It's the Switzerland for Southeast Asia, like in a sense that so you kind of like grasp your head around the legal repercussions and all of that. I think that's pretty much all that I have with regards to the DD question. I would want to close the session by asking the two of you, like, I guess, what's like one thing that you want to left out, or like, how do you sort of like see the future of yield? Because like, it seems that everybody and their mom is like working on yield right now. So like, as as players in the space, like, how are you looking at in the next like 1 or 2 years? Maybe you want to get started first.
Yeah. From our perspective, the future of yield is to be verifiable, and we are together. We do this thing, and the user should not settle to less than have real-time transparency. And I mean, if you put your money into something, you should put it into those opportunities that prove to you that they are doing the right things.
Simple and straight. Yeah.
For me, I'd say a couple things. Stable coins, it's very clear that this has been one of the highest product market fit tools or innovations that's come out of crypto. Stable coins is the present. Stable yields is the future, because all this flow needs to go into products where yields don't go from 20% to 3% overnight. If you say that you're going to deliver a yield, then the only fluctuation should be 50 basis points, 100 basis points. A yield should be a yield, right? So I think the corollary to that is we also feel like Asia is the future, and Asia's alpha, and Asia is an interesting, it's just an interesting asset class, which for whatever reason has not been represented at scale in crypto so far. Look at all the TVL stats on RWAs, XYZ, DeFi Llama. We saw a gap for interesting investments based on the region. That's exactly our background. And, we're starting with fixed income products, and Asia Dollar and Mu Bond are our first products, but we think that as a protocol and as founders, our wedge is we do have the ability to access all this interesting inventory, and we want to make it available. We want to make it available on chain, and we want to make it available in a way that's like fun to use in DeFi. So for us, definitely excited to have our first product out, but a lot more to come from us, and we're just getting started.
Thank you both. As a quick closer, I could not agree more with what both of you have said. As a fund, as a yield fund, as a market neutral DeFi only yield fund, we actually get pitched a lot of these like different products. And I mean, it's always a bit, I mean, like whenever there's like an off-chain component and there's no verifiable, right? Like that's like something that for us, it's like an immediate red flag. I'm not just saying this to like talk our book on the vault here, but like, it's like actually like, it's scary. Like even if they say, oh, I'm based in like some jurisdiction, like without proper like verification, it is still like you are still taking a lot more risks. And then at the other side of it, what Patrick said is that we are seeing a need of both good yields and also good assets brought on chain. So I'm talking a bit like adjacent here, but I think what the industry wants these days, it's unfortunately not to use altcoin as collateral on Aave, but what they want is to like, let's say, use Mubon as collateral, borrow that, and then long QQQ perps, right? Like that's what they want. Like they want good assets on chain instead of like, oh, I have to now long alts number 1 and alts number 2. Like that's a complete separate topic of discussion. But I think what these two guys are working on is important for the next 1 or 2 years. So yeah, that's pretty much all that I have to say that we have to say, unless there's anything else that you guys want to leave the room with.
No, it's like Marco said at the top, our accountable Mu Digital Vault is now featured on the Monad App Hub. So go check out Monad's homepage and you'll see us there. Thank you, Monad, for the pump, but thank you all for checking us out. And we're always available, whether it's on socials or Discord, for any questions. We're always happy to answer anything coming from the community.
For sure. Awesome. Well, thanks all. I think we'll end it today. Cheers.
Thanks, guys.